Dear students, today I am going to explain you the first illustration from your textbook, which is there on page number 25. Okay, let us begin. From the following transactions of Mr. Nag, identify the nature of accounts, debit, credit item, and also give journal entries. So here we are asked to write the journal entries. I already have informed you how to write journal entries. Journal entries heading, you'll put journal entries. We are given Mr. Nag. So we are writing in whose books of accounts? In the books of Mr. Nag. So journal entry in the books of Mr. Nag will be writing. You can even write more as on the dates are also given, or we can write in the books of Mr. Nag for the month of January, because we are given right from the first date till 31st date of January. So during that month of January, whatever has happened in the business which is run by Mr. Nag, we are going to write the activities, the transactions happened in the organization. So this is how your format will look, dear students. You'll write date, particulars, LF, ledger folio, debit, credit, amount in rupees, amount in rupees. This is how clearly you are supposed to write, and this is how your format is going to look. Okay, so let us have a look. The first transaction, during which year it has happened? 2014. We are given different dates for the month of January. So on 1st January, let us write 2014 on the top. It means it belongs to that date, or let us say Jan 2014, first date. Okay. Mr. Nag started business with cash. Every transactions will have two aspects you'll have to find out. Like here we have Mr. Nag and cash. What has happened? Business is being started. So Mr. Nag is investing money in the business. How much has he invested? 45,000. So this money amount which is invested in the business is called as capital. So here we have two accounts. Instead of Mr. Nag, we'll take it as capital account, and we have cash account. Yesterday I have given you the list of items. In that I have told you capital is personal account and cash is real account. Now apply the rules. Okay. Personal account says debit the receiver, credit the giver. Mr. Nag, what is he doing? He is giving or receiving? He is giving. It means capital is to be credited. Okay. Likewise cash. Cash is a real account. Real account says that debit what comes in, credit what goes out. When you are investing money into the business, cash is coming into the business or going out of business? It is coming into the business. That is why cash should be debited. So whenever there is capital, or a business is being commenced, or a business is being started, your entry by default, it will be like this. Cash is coming into the business organization. And why it is coming into the business? Because capital is being invested. Okay. So this is how you'll write, and you'll write being the entry for being the entry. We are writing this entry for starting of a business, for starting of a business organization. You can write in your own words. Just take care of grammar. Okay, how much amount the owner Mr. Nag has invested? 45,000. Okay, so debit side we'll write 45,000 like that. Credit side also we will write 45,000. Okay. Why we have written up and down? Because debit entry is on the top and credit entry is at the bottom. Credit we don't write CR again. This DR means debit. To show credit we write this 2 over here. Okay, TO2. Now let us see what is the next date given to us. We have second. Just leave a line and write second date, that is Jan 2014 second. What has happened? Purchased furniture worth 10,000. Okay, what has happened in the company? They have purchased the furniture. So what are the two aspects? One is purchase. See, Purchased furniture, very clearly it is given. So we'll take furniture. So whenever we are purchasing, what is happening? What is the next aspect? Cash. When you purchase an item, you pay. Okay. So here furniture is real account, cash is also real account, and real account rule says that debit what comes in, credit what goes out. When you are buying furniture for your company, what is coming into the company? Furniture. And what is going out? Because you are buying, you are giving cash. Cash is going out of the business. So how we will write the journal entry? Furniture account debited to cash account. Okay. Furniture account debited to cash account. Whenever you see a transaction, if a cash is coming in, it means debit. If a cash is going out of your company, means credit by default. Okay. What is this entry for? Being the entry for furniture purchased. Being the entry for furniture purchased. How much amount we have paid? 10,000. So that very same we'll write here. 10,000 in the debit, 10,000 in the credit. Next transaction, purchased goods worth. Again here what are the two aspects? One is goods, the other one is cash again. I told you whenever goods is there, by default in accounts language we write it as purchases. Okay. So what are the two accounts here? Because goods is given, we'll take it as purchases. But in case if an item is clearly written, what is that item? Goods means what? Item. Here we don't have any clarity which product is this. That is why we'll take it as purchase. And when we are purchasing something, obviously the next aspect is cash which is going out. Okay. Purchases, I told you it is a nominal account. Debit all expenses and all losses, or you can also take it as goods, real account. Debit what comes in. Whatever you take, your answer will be same. So purchases account will be debited, cash because it is going out. When we are buying, we will credit it. So how we'll write the journal entry? It has happened on which date? 3rd. We'll write it as purchases account debited to cash account. Being goods purchased. You can write being the entry for, or you can just write being goods purchased. It's understood why we have written this entry. And how much have we spent on purchasing goods? 5,000. So in debit we'll write 5,000. In credit also we will write 5,000. You have already recorded this illustration in your book. I am just informing you. Okay, 4th date I have already written sold goods for cash. We have two aspects here. One is sold goods and the other one